We want to get chatting with the first corporate on our show today. That's SP Apparels. The stock had surged nearly 20% on Friday. In the last 1 year, it's seen a gain of about 90%. Q1 was a bit subdued for the company, but to talk more about the business opportunities, did the Bangladesh turmoil open up any opportunities for the company? They're looking at Sri Lanka in a close way too. We now have with us P Sundararajan, Chairman and MD at SP Apparels. Thank you very much, sir, for joining in on the show. The last time we chatted, you indicated that Q2 will be a lot better than Q1. Can you give us a sense how Q2 have shaped up for you?
Yeah, I think Q2 will be, yes, probably it will be at par with Q1 because some air strikes have happened due to whatever reason. But Q3 will be much better and Q4 will be further better. That's our prediction.
So in Q1, your revenues were down 1%. So you're saying in Q2 also revenues will be flat to marginally negative? And what about margins? Because you hope to improve margins.
Yeah, it will be more or less the same as Q1 only. That's what we are expecting. We are predicting.
Oh.
Right. I wanted your thoughts on two geographies. One is Sri Lanka, where you are believed to, grow a lot faster. You're increasing your presence out there. So how much does it grow from here on? At what pace? And what proportion of your revenues come in from there? And the second part is that everyone's talking about this Bangladesh +1 trade when it comes to garment manufacturing. Have you seen any signs of that? Do you stand to benefit from it?
Yes, with regard to Sri Lanka, yes, we have already kick-started the operations in Sri Lanka for our SP UK Limited. And for the SP Apparels India operations, already the factory audits are over, so we are expecting to commence the production from October onwards. And over a period of time, in the next 1 year or so, we are expecting about 20% of our total production will be happening from Sri Lanka. So which is roughly about 1,000 machines we will be able to run and ship from Sri Lanka. And with regard to Bangladesh, yes, as I mentioned before also, even before this disturbance in the recent past, the retailers wanted to de-risk the concentration in Sri Lanka, in Bangladesh. So they already started moving some of the businesses to India in addition to China plus in strategy. So, and this issue.
Right, seem to have snapped that connection, something to do with the telecom lines today. All right, we'll just try and repatch that. It's coming to us in patches. We'll just try and reconnect with you as you were making that point. But for now, the next quarter looks as good or as bad or as flat as the first quarter. We'll keep an eye out on business performance out there, though the stock has done extremely well over the last 12 months. And the benefit of Bangladesh is likely to come by, and in the very near future, once Sri Lanka has, as the company said, initiated its production out there, will flow into their books as well. Prakash is with us. Sir, you were making a point on, the kind of business that will accrue from Bangladesh into India and your own production. You said up to 20% will come in from Sri Lanka over the next couple of years. Is that correct?
Yes, exactly. Over and above our own production in India.
And on Bangladesh, you were making a point.
Yeah, on Bangladesh, yes, those businesses are coming to us. And we have an additional capacity of 1,500 machines from recently acquired young brands. That's the one which we have recently acquired. So including that, I think our capacity will definitely grow up to about 20 to 25% over a period of 1 to 2 years' time.
Mr. Sundararajan, hi, good morning, sir. So is this demand boost? You said extra 20% demand because of Bangladesh. Is this one time? Is this durable? I mean, is this a bump going to stay?
Yeah, I think definitely the retailers want to move away from Bangladesh to de-risk. It doesn't mean that completely wipe out from there because it's overflooded. The orders are overflooded in Bangladesh. So definitely anyway will be moving. Even otherwise, our customers have been asking us, insisting us to increase the capacity. So our process started even much before what has happened recent past in Bangladesh. So it has got nothing to do with our growth. So what will happen is that there will be our customer base will increase now. So we will increase our customers after acquiring young brand. We will be focusing more into American customers as well. So which becomes the customer base will be much broader than what we have now.
Okay, so you did about 1,100 crores in sales in FY24, roughly around there in FY23 as well. What should we expect going forward on the top line? What kind of growth should we expect in 25, and then maybe some of this kicks in into top gear in FY26? If you can give us a sense.
Yeah, see, we are working towards, as I said, the more the capacity, because getting the order inflow is not so far not have been an issue. So the more the capacity, more the growth is. So we are planning for. So currently we are working with about, as I promised to given a forecast to my investors that this year, by end of this year, our machine utilization of the capacity will be around 90% plus, as against it used to be below 80%. So there itself, there is a clear, obviously there is an indication for 20% growth. In addition to that, we have young brand capacity of 1,500 and Sri Lanka 1,000 machines. So all put together, we will be able to do about 7,500 to 8,000 machines in over a period of 12 to 18 months' time. So naturally, the growth will happen.
You don't want to put a number to it, right?
Yes. I mean, I can see, because the order book is not a problem for us so far. So the more the capacity grows, the more the sales grow. So we are, from 5,000, we will be jumping to 7,500 over a period of 12 to 18 months' time.
All right, fair enough. So roughly about 20% kind of growth is possible?
It's indicatively, yes, 20%.
And this will kick in only in FY26, right?
Yes, please. Yes.
We'll leave it there. Thank you very much for joining us. Good speaking with you, Mr. Sundararajan. Thank you very much for joining us here on CNBC TV18.